Welcome to this video webcast on Endeavour Silver's Terronera project and the release of our 2021 feasibility study. Please follow along with the presentation slides and we'll have a time for a Q&A after the presentation. I will be making some forward-looking statements, so please be aware you are cautioned. As an overview, Terronera represents the potential to become Endeavour's next core asset and our largest and lowest cost mine. This proposed mine will double our consolidated production in 2 years and deliver one of the strongest organic growth profiles in the silver peer group. With the completion of the feasibility study, we are now in position to advance rapidly towards construction, subject to final board approval and project financing expected later this year. The feasibility study estimates an underground mine that's scheduled to produce 3.3 million ounces of silver and 33,000 ounces of gold a year, or 6 million silver equivalent ounces annually over a 12-year mine life. This will be a 1,700 ton per day ramp access mine feeding a flotation plant capable of producing high-grade bulk concentrates. The feasibility study released today highlights the robust economics of this high-grade vein system. The study estimates an after-tax net present value of $174 million with an internal rate of return of 21% and a payback period of 3.5 years using a base case price of $20 silver and $15.75 gold. This would be one of the lowest cost mines in the entire silver sector with projected cash costs net of the gold credit at 59 cents and all-in sustaining costs estimated to be a very low $3.24 per ounce over the life of the mine. This will drive a significant decrease in our consolidated cost profile, improving cash flow and earnings for the company. The initial Capex is estimated to be $175 million with sustaining Capex of $105 million over the life of the project. We are very pleased with the results of the feasibility study today. Our management team has worked with Wood plc, a global and leading engineering firm, for 12 months on this study, which included comprehensive reviews of construction, operations, and costs to provide confidence for project completion within budget and on schedule. As importantly, we can move forward with a more confidence from banks in accepting these results for financial due diligence required for project financing. Overall, we have incorporated more appropriate costing into the model, both from supply constraint and increased sector demand, and we've improved the design and operability of the project from last year's PFS. So again, recapping our base case feasibility study highlights, this is a classic ramp access underground mine developing a shallow and thick and rich ore body over a 12-year mine life, generating an NPV of $174 million with an internal rate of return of 21% and a 3.5-year payback. It'll generate life of mine cash costs net of the gold credit of 59 cents and a mine all-in sustaining costs net of the gold credit of $3.49. Generating on average of 6 million ounces of silver equivalent per year, and we still have tremendous exploration upside on the district scale land package. Using metal prices closer to today's price of $24 silver and $1,800 gold, with similar operating metrics, the financial metrics increase significantly, with an NPV rising to $282 million, IRR going to 30%, and payback period decreasing to 2.5 years. Life of mine cash costs would fall to negative $1.50 per ounce, and net of gold credits, and mine all-in sustaining costs project to be $1 per silver ounce. On slide 7, it reviews the favorable outcomes and improvements in the feasibility study compared to the PFS. Firstly, using a methodology to better estimate high-grade silver zones and appropriately including grade estimates from the mineralized waste rock in the diluted ore, total life of mine reserves increased by 33% to over 7 million tons. The methodology applied is called the high-yield risk model, which considers a silver grade halo outside stope boundaries that were previously ignored. Secondly, we've optimized the production profile with elevated grades and higher production in the early years, and increased the mine life to 12 years. We added a new portal number 3, to improve sequencing, flexibility, and ore availability. While the third portal increases the Capex, it provides many benefits to the mine plan, including access high-grade material in the early years to fast-track production. Additionally, we've incorporated more long-hole mining, increased development while reducing mining cost. Additional surface infrastructure was added, where previously costs and requirements were underestimated in the areas of electrical, roads, waste rock, and water management. We increased plant throughput from 1,600 tons per day to 1,700, which resulted in an upgrade to the crushing, grinding, flotation, and filtration systems. And with increased industry demand for milling equipment, it resulted in higher price quotes being 20 to 25% higher than we previously estimated. So while the initial capex did increase to $175 million, overall we feel we have a much improved mine with improved operability, flexibility, and deliverability. Let's go back to an overview of the asset and some background information. Terronera is located 50 kilometers northeast of Puerto Vallarta in the state of Jalisco, Mexico. It has excellent road access and is a 1.5-hour drive from Puerto Vallarta. The mine will be located in a mountainous and forested terrain near the small towns of Santiago de los Pinos and San Sebastian del Este. Terronera consists of 25 mineral concessions totaling over 20,000 hectares. The geology is a classic Sierra Madre Occidental that hosts the majority of Mexico's gold and silver deposits and is a classic low sulfidation epithermal vein system. Mineralization is contained in multiple veins, and our project encompasses 2 veins, the Terronera vein and the La Luz vein, which typically run 1 to 8 meters thick, grading anywhere from 100 grams of silver per ton to 1,000 grams. The history of mining in this area goes back to the 1500s, when there was a small-scale mining off and on. Endeavour Silver optioned the property in 2010 and bought it outright in 2013 for less than $3 million. Since 2010, we've invested over $33 million on all exploration and engineering. Since 2015, we've conducted 6 independent technical reports and drilled over 100,000 meters. Suffice to say, we've added tremendous value to the project over the years. I've touched on some of the project milestones already, but just to review, we made the initial discovery in 2012 and started our economic studies in 2015. Today, we released the results of our feasibility study, which makes a major milestone for our investors. This has been a long time coming with much hard work. As you can see from slide 13, our reserves and resources have increased over the years. Both the ounces of silver and gold, and a 50% jump in silver equivalent grade since 2012, and a 56% increase in total tons in reserves and resources over the last 5 years. All this was accomplished at a discovery cost of less than 50 cents per ounce of silver equivalent. This is the resulting annual production and grade profile. It is front-end loaded with higher production and higher grades in years 1 to 4 to improve economics. On this chart, you'll see that silver and gold break down and the silver equivalent grade in the green line. The grades don't drop below 450 grams per ton until after year 5, primarily due to the mining of the very high-grade La Luz vein. You can see the Terronera and La Luz grade profile in the longitudinal views, and I'll add they remain open along strike and to depth. So initial capex comes in at $175 million. The largest portion is allocated towards mining of $62 million, which includes mine development and pre-production mining, a significant increase from prior year's PFS. The feasibility study estimates a $75 million increase in capex compared to the PFS. The largest addition to the capex was related to mining, due to the additional portal and related development, ventilation, and additional equipment that's required for that portal. Over the life of the project, development meters increased from 48 kilometers to 76 kilometers, which will give us improved operability, flexibility, and ultimately a better life of mine project. Capex estimates for the process plant increased by $11 million due to the increased capacity and the higher price quotes for milling equipment from increased market demand over this past year. Infrastructure increased by $14 million, mainly due to improved estimates for electrical, roads, waste rock, water management, and a larger camp with a larger workforce. As I previously mentioned, we estimate costs being the lowest quartile amongst the primary silver producers. You can see the chart. Cash costs on a byproduct basis is 59 cents. And on and on an all-in sustaining cost basis at the mine site, estimates to be about $3.24 per ounce, net of the gold credits and at base case prices. If we consider spot case prices, the cash costs become a negative $1.50 per ounce, and mine site all-in sustaining cost is approximately $1 per ounce. Here is a look at how Terronera would stack up in the industry to the other operating mines. Again, on both a cash cost and all-in sustaining cost basis, it is currently in the lowest quartile of operating mines in the peer group, and it'll cut our consolidated operating costs in half. These low costs generate a very significant after-tax free cash flow and EBITDA, with base case free cash flow coming in above $40 million per year, and in the spot case scenario, more than $50 million per year, for an accumulated free cash flow over $300 million on base case and over $450 million in the spot case. In terms of the sensitivity analysis, a $1 movement in silver and a $75 movement in gold attribute to about a $30 million movement in NAV, as shown in our sensitivity analysis. The Terronera and La Luz mines will be classic underground ramp access mines. Both mines will be feeding one centralized mill at an average output rate of 1,700 tons per day. Endeavour's other operations have very similar characteristics and allows us to leverage our internal expertise developing and mining Terronera. On slide 24, you can see the feasibility study front-end loads the development. The two schematics on the right side show the development levels and mining blocks over the first 5 years. This is an opportunity where Endeavour Silver believes we can add value as we take ownership of the project, particularly with reducing some upfront development meters, which could have a positive impact on return metrics. The process flow sheet is a basic 3-stage crushing, 3-stage grinding, 2-stage flotation, and thickening and filtration circuit to produce a high-quality bulk sulfide concentrate. The plant recoveries are targeting 88% for silver and 76% for gold, and similarly, as we take ownership of the project, we will continue to evaluate opportunities to attain higher gold recoveries, as we previously estimated in the PFS. Surface infrastructure, again, is fairly simple. We have some leveling of the plant site to put a plant on top of a hill, and that material will move down to the tailings storage facility. You can see where Portal 3 and Portal 2 will access the Terronera vein, and with Portal number 3 providing access to the upper high-grade oxide zone, and Portal 2 being used as our main access ramp. I already mentioned that the deposit remains open at depth and along strike, and there are many veins that have yet to be drilled at Terronera. There is opportunity to convert inferred resources as we develop the mine and drill below our existing envelope, and we have identified regional targets outside the current resource envelope. While our focus has now shifted to development, we have committed $2.5 million for drilling this year, with positive results announced earlier this year on Cortez and ongoing drilling at that concession at this time. We've completed a positive feasibility study, but there's always room for improvement. As Endeavour management takes ownership of the mine design and planning, we believe that we can incorporate internal expertise in engineering, procurement, and construction to reduce costs and add value. We've assembled a project management team with significant construction experience and will add to this group over the coming months. We are targeting a 24-month construction schedule with full construction work beginning once a financing package is in place, and we have a formal development decision from our board. In the interim, the board has approved an additional $13 million development budget from now until year-end to commence early works in preparation for full construction. Activities have already started that include front-end engineering, procurement, temporary camp construction, and preparation for forestry work and site clearing. Endeavour has always operated with the belief that corporate integrity is core to our success. Our exploration group built a strong relationship with our surrounding communities, and we will continue with programs in education for employability and private and public partnerships with all levels of government and other institutions. The Terronera project will bring significant positive economic benefits to the area, employing over 500 people during operations and over 750 people during construction, with many spin-off benefits. The mine will be the largest employer in the region, and over the life of the mine will contribute close to $200 million in corporate taxes. From an environmental standpoint, we have all the major permits needed to commence construction in hand. We are extending and amending some of the permits due to minor design changes, but most of which have been filed. Additionally, with Terronera being our new model mine, we have numerous opportunities to make a positive difference, including reducing our GHG emissions by incorporating LNG as a power source, using dry stack tailings, integrating equator principles into our development and operating plans, and continuing to operate with integrity to be ESG leaders in our communities. In closing, the Terronera project is Mexico's next silver development asset that is ready to build and ready to grow. I'm confident that we have the right formula in place for value creation. The results of this feasibility study provide tremendous confidence in the costs and operability of this proposed mine under the leadership of a very strong project management team. Early works construction activities have already commenced, and our board has approved an additional $13 million budget to advance front-end engineering, procurement, and land clearing while we complete the financing. As there is a real scarcity of silver-dominant assets, this project really stands out amongst the peer set. Terronera will allow Endeavour Silver to double its production, cut our production costs in half, and continue to build a sustainable company that benefits all stakeholders. That's our webinar today. I'd like to thank you for attending, and I'll turn it over to our VP of Investor Relations, Galina, now for Q&A. 30-second delay.
Thank you, everyone, for joining today's feasibility study webcast for the Terronera project, and thank you for your patience with the connection at the beginning of this presentation. I will begin by reading out the questions from the webcast portal for management, and then we will go through the questions one by one, so please feel free to add your questions as we go through. Question number one comes from Roberto, and the question is, have all permits been achieved, construction, environmental, and power?
Thanks, Roberto, and thanks, Galina. And yeah, again, apologies for our technical difficulties at the beginning of this webcast. From a key permit standpoint, we've had a lot of our key permits in hand for quite some time. With the changeover from the FS design compared to what we had in the PFS, we do have some amendments that we are making to permits, but not significant ones. If we wanted to, we could get started on construction today. The footprint of the plant's relatively the same. There's some spots from a staging area around Portal 1, ultimately some permits for Portal 3 that we're still waiting on, and actually also an archaeological permit just to get started, which is a municipality permit that we're in process of filing right now. So ultimately, as I say, we can get started now with the construction with the permits we have. We do have some amendments and some extensions that we file. Sermonat's been back in their office now for a couple months, and we fully expect to have those by the end of the year.
Question number two comes from Oz Williams. The question is, with inflation and wage rises occurring, how do you plan to mitigate rising costs over the construction period?
It's a good question, Oz. It's not easy. Obviously, the good news is we are a silver producer and a gold producer, and one of the best ways to protect yourself against inflation is obviously precious metals. But for us in the feasibility study, there is a contingency that takes care of part of that. I think we've been very conservative in a lot of our estimates on labor with regards to wages, that there is opportunities to make sure that we keep that under control over the 2-year construction period. I think more importantly will be the constraints that we're seeing on supplies across the world. And we've already tried to source mining equipment. We've priced that mining equipment in. We've gotten quotes from the engineering groups and started some early engineering work. So as long as we get going here relatively quickly, hopefully we can keep the costs in line with what the feasibility says, and hopefully even better than that.
The next question comes from Craig Hutchinson, and the question is, what type of financing options are you considering? Is equity a consideration or off the table? Thank you.
Thanks, Craig. I think that's a fair question. Equity is never off the table. We are looking at debt financing. We've been working with a number of institutions, both in North America, Europe, and Asia with trying to put a debt financing package in place. And currently, at the end of June 30th, we had about $125 million cash in the bank, working capital north of $145 million. We also had bullion sitting on our balance sheet that was worth about $18 million, carried at 10. So we feel that we have a big chunk of the equity portion already paid for. Now, we do want to protect our balance sheet a little bit, and that's the idea of putting some debt into place. And anywhere from $80 to $100 million is debt's what we're looking for. We should have more information on that in the coming months.
The next question comes from Ryan Thompson. Hi, Dan. Thanks for the update. Do you have a sense of timing on getting any permitting amendments?
Yeah, thanks, Ryan. Fair question. We think that we should have all permits in hand by the end of the year. Of course, you never can count on governments perfectly, but as I said earlier with the first question from Roberto, ultimately we have all the permits that we need in hand to start construction. The footprint for the plant, which is the early earthworks, we're cutting a hill back. We have about 6 months of work there. We can get that done. So we have 3 to 6 months of kind of contingency for those final permits to get going on Portal 3 as we had planned in the feasibility study.
The next question comes from Cosmos, and the question is, how have you factored in inflation that you have experienced earlier this year at Bolañitos and Guanaceví into your Terronera numbers? And as for benchmarking costs, what was the timing that you used for cost estimates?
I'm not sure I fully understand that second part of the question. From an inflation standpoint, obviously a lot of the above ground infrastructure, and in fact in feasibility study, it's also below ground infrastructure, all the mine development, that's all done with third-party quotes. Ultimately, Wood and our group have gone out and got quotes for mining equipment, plant equipment, et cetera, and ultimately we saw, even from the PFS to the FS, a 20 to 25% increase in plant equipment costs. So we believe some of that's been built in, and if we've got hard quotes, we believe that the guys that we've gone out to, the groups that we've gone out to, will be able to meet those quotes in our construction if we get moving sooner rather than later. From a mine development standpoint, again, looking at third-party contractors for doing that development, again, we expect those quotes to be strong and hard. Ultimately, we'll do the best we can from an inflation standpoint, but again, we trust in gold and silver when it comes to inflation, and if there's rampant inflation that goes through our economy, we think that's going to be worked through on the back end from a revenue standpoint. So there's natural hedges in the project. From a benchmarking standpoint over the years, most of those quotes were received in the last 6 months, so since January. Again, we realize there's global constraints ongoing, and we've definitely seen cost increases in our other operations. But ultimately, it's our job to maintain those costs and keep those costs under control.
We've got another question from Cosmos, and the question is, the high grades at La Luz, geologically speaking, can you explain the reasons why it is so much higher grade? Is La Luz closed off, or is there still more exploration potential? And are there other similar veins to La Luz, and what are some of the other key exploration targets?
Okay, you might have to repeat those questions in order for me with all that. So for the high grade zone area, ultimately we capped our grades in the PFS and in that resource, and because of a dome that's coming through the geological system, it was recommended by our third party Wood, how they came up with a calculation to use this high yield restrictive method to be able to get a better estimate within that region. And ultimately the other side that happened between the FS and the PFS is the diluted ore. We took a zero approach for grades in that diluted ore, and in the FS we were able to use the mineralization. So for example, if it was 80 grams silver and 1 gram gold, we can now incorporate that into our mine plan to make sure those grades maintain, because we are using a lot more long holing, which has increased dilution, but using that higher grade in that certain region. And if you can please repeat the second and third part of those questions.
Yeah, so the second part is related to what are some of the other key exploration targets?
Yeah. Well, about 3-4 weeks ago, we put out regional results on a number of veins, some that are southeast to Terronera, San Simon, Fresnillo, Lindero, Pedencia. And we did some good work there, highlighted some new veins that we feel will have a lot of work to do here in 2022 and 2023. And we're continuing to drill a concession that we picked up this year called Las Cuotas. Again, in that news release from about 2 months ago, we highlighted some very good results. We're continuing to drill there. We should have results either in Q4 or Q1 from Las Cuotas. So ultimately, there's significant exploration potential still in the area. Like the feasibility study incorporates a 12-year mine plan, which is on the indicated resources that we've defined at this point. There are inferred resources around Terronera and La Luz. As we get into the ore body, spend on exploration drilling, we expect that ore body to be open along strike, so hopefully more potential on Terronera, but the regional potential at Terronera is also extremely good, and hopefully we'll have more results from Cuotas, as I say, in Q4 or Q1.
The next question is from Mark. So the question is, thanks for the detailed presentation. Can you discuss the exploration potential and also the 3 areas that offer resource expansion? So very similar to the previous question, but can you, and then there's a second part to the question. You may pick up, are you going to be picking up some new concession areas?
Yeah, thanks, Mark. I did touch on a lot of that from Cosmo's questions. Not so much to repeat it, but again, Las Cuotas is a big target for us. We think we can build significant tons and ounces ultimately at Cuotas, but there's a lot of work left to be done there before we bring it into ultimately a mine plan, and our focus now is on development, and as we develop, I'm sure we'll have exploration results go out over the next couple of years. And the second part to that question again?
Are you going to be picking up new concessions in the area?
Again, over the last 2-3 years, we've picked up concessions. Our land package is almost over 25,000 hectares at this point. We're always looking to pick up concessions or land packages within the area, but I can never point to when that's going to happen or if it's going to happen. It's dependent always on another party. I think most of the areas in that region have been claimed or have claims on them. But as we work through it, we'll see what we pick up.
We've got another question from Oz, and it's regarding COVID and what type of contingencies are in place regarding safety and maintaining the construction timeline should we see further lockdowns or limitations?
Yeah, that's a very fair question, and clearly after 1.5 years, COVID's still prevalent through our society and obviously prevalent through Mexico. And we've done an extremely good job at our operations to kind of keep COVID at bay. We are still seeing COVID come to our doorsteps. We have protocols in place, namely tests for anybody that's showing symptoms, and ultimately they're turned away at the gates. And we've done a good job of educating our workforce and helping our workforce when it's ever come through, because ultimately, as we've seen, anybody can be impacted from COVID. And when it comes to the Terronera construction, same protocols will be put in place. It's not a significant cost to the company at either operations, and it won't be a significant cost expected during construction. But of course, it's a risk that if we have a massive breakout through our construction crew during the Terronera build, that can impact the timeline. And again, we have contingencies built in from a cost standpoint, but hopefully as a group and as Mexico gets more vaccinated, it becomes a lower and lower risk.
We've got another question from an investor in the audience, and the question is, what is the current cash and or debt position of EDR?
Yeah, current cash as of June 30th was $125 million. Again, we had working capital north of $145 million at June 30th. We have no debt on our balance sheet at this time. We have about $6 million of equipment leases that would be deemed to be long-term. So we have a very strong balance sheet, and we are going to look to leverage that balance sheet here in the next couple months to be able to fully fund Terronera.
I'm not seeing any further questions in the Q&A portal, so I'd like to thank... Oh, we just had one more pop up from Cosmos. So the question is, On mining, what is the capacity of the ramp? What is the underground mining rate for ore and waste? And will you be leaving the waste underground for backfilling?
Not just one more question, Cosmos. That's three more questions. But the capacity of the ramp, it's over each portal is going to have capacity north of 600 to 700. We think the mine can actually get up to almost 2,000 tons per day. But at that point, what's in the feasibility study is 1,700 tons per day. We will have waste that will be backfilled, waste that will get piled up and then eventually put back in into the mine. And ultimately, there is a third part of that question again, Galina, sorry.
And will you be leaving the waste underground for backfilling?
Yeah, so the waste will be coming above ground, and then we will have to take some underground. That's all built into the costing for the feasibility study.
And now we've got more questions popping up. So if you have any more, please get them in, as we do have a bit of a 30-second delay. But we've got another question from Mark. Could you please discuss the political and regulatory environment in Mexico? How are the discussions on taxes and government royalties and duties evolving?
Yeah, political environment in Mexico. AMLO's been in office for 3 years now. We haven't seen a change to any of the Mexican mining taxes. In 2013, they put in special taxes for mining companies and for precious metals companies. So there's a 0.5% royalty on precious metals that was put in place, and a 7.5% EBITDA tax, which we call the special mining duty. When AMLO took office, people were concerned. Obviously, as mining companies improve their earnings and improve their cash flows with higher prices, there's always rhetoric around governments increasing taxes. We don't see any taxes in Mexico coming. We haven't heard any discussions about increases taxes in Mexico's coming. There's been a lot of rhetoric around Canadian mining companies in Mexico and going after taxes that the government believes are owed. At this point, that's not an issue for us. We do have a back tax payment of about $2 million that we've been disputing with the government for almost 10 years. But at the end of the day, we don't think that's a material amount to us. We think we are in the right. And as far as going forward from a tax standpoint, we are in the jurisdiction of Mexico. Again, we don't see new taxes coming for the mining space, but you never know. We always have to be prepared, and we'll make the adjustments when we can.
We've got another question from Roberto. And the question is, has COVID been an issue with the permit offices? Meaning, are they opening and then closing based on the news that's constantly changing?
Yeah, thanks, Roberto. It's a very good question. And Sermonat, which is the mining regulatory body in Mexico, did close their offices. They were working from home, but of course, sometimes when you're working from home, it's a little bit disconnected or it's slow to respond, and we do need to get some of those regulators out to site to be able to inspect certain things, and that was delayed. But the good news is they've been back in their office now since June. We haven't received permits in the meantime for our other operations, little permits here for Terronera. So it is moving, maybe not as fast as we'd like, but typically those offices never move as fast as we'd like.
We've got another question from an investor in the audience. What is the breakdown of the $175 million Capex spend in years 1 and 2? And I'm presuming we're talking more about kind of the schedule of the spend.
Yeah, we'll have a more breakdown that comes out when we file our feasibility study within the 45 days. But generally, over year 1, we spend about $110 million on initial Capex. In year 2, it's $65 million. So it is front-end loaded, and as we noted today in the webinar, we do have a $13 million spend between now and year-end, getting started on earthworks, engineering, setting up our office. So it starts off a little bit slow, ramps up very quickly. We'll be spending money very quickly, and it's pretty homogeneous over that 2 years, but ultimately more upfront.
Okay, so it does not look like we have any further questions in the Q&A question portal, but Dan and I are always available offline for any questions, so please feel free to reach out after the presentation. And thank you again. We really hope that you enjoyed the presentation.